Thanks for joining us on this APL Apollo Investor Update conference call on such a short notice. I am Anubhav Gupta, Chief Strategy Officer of APL Apollo Tubes. I am joined by my fellow colleagues, Mr. Deepak Goyal, the Chief Financial Officer of APL Apollo Tubes, and Mr. Rahul Gupta, the Managing Director of Apollo Tricoat Tubes Limited. We are glad here to discuss about the recently announced merger of Apollo Tricoat and Shri Lakshmi Udyog Limited into APL Apollo Tubes. After our short presentation, we will open the floor for Q&A. I would request all the participants to restrict your questions towards only this recently announced transaction and not any other business update. Let me start with our presentation now. I have segmented our presentation into three broad categories. Number one is the basic contour of the transaction. Number two is the strategic rationale, why we have done this. And number three, the benefits to shareholders of both the companies. So coming to the first segment, which is broad contours about the transaction. It's a plain vanilla merger of Shri Lakshmi Metal Udyog, which is 100% subsidiary of APL Apollo Tubes, and Apollo Tricoat Tubes, which is 56% subsidiary of Shri Lakshmi Udyog, into APL Apollo Tubes Limited. As per the fair valuation done by a Big Four consultant, KPMG, they have derived at the valuation of 1:1, swap ratio 1:1 for both the companies. So Apollo Tricoat shareholders will get one share of APL Apollo Tubes once the merger is complete. This fair valuation is 16% upside to Apollo Tricoat's last closing price and 25% premium to the 3-month average daily weighted average share price formula. For APL Apollo Tubes, the new share capital will increase by 10.8%. So we are talking about around 10% dilution for APL Apollo Tubes. As for the new shareholding, the existing shareholders of APL Apollo Tubes will hold 89.2%, and the Tricoat shareholders will end up owning 10.8% in the consolidated merged entity. The promoter shareholding will fall to 33.5% from 37% today because of the dilution after the new shares will be issued. We expect this transaction to get over by third quarter of FY22. This is based on a simple assumption that the board has already given approval for the merger. Now we will approach the exchanges, SEBI and NCLT, after which the shareholders and creditor meeting will take place. Post that, the second motion petition will be filed, and then we should expect the final order. As per the consultants, we should be able to finish this by December 2021, plus minus 1 or 2 months. The merger will be effective from date of 1st April 2021. So FY22 should be the full year of consolidation for APL Apollo Tubes. And lastly, this transaction is tax neutral for all the three companies which are involved in this transaction. Coming to the strategic rationale why we have done this. So like I said, it's a simple plain vanilla transaction, and we have done with the thought of achieving 8 objectives here. Number one is simplified group structure with a single listed entity, APL Apollo Tubes Limited. Number two, to create a structural steel tube giant in India into a single company with capacity of 2.6 million tons. This makes our company, APL Apollo Tubes, among the top 5 global steel tube companies. Number three, stronger platform for growth. We have already seen the kind of growth which we have demonstrated over the last 10 years. So the single platform will give further boost to create a strong platform for growth. Number 4 is the solid balance sheet and greater financial flexibility for our group, which will help shareholder reward in future. Number 5 is to increase the cross-sell opportunities between the two companies, where we think there are a lot of synergies. Number 6 is the cost synergies between the two companies. That is at the plant consolidation level. We have 4 plants of the group in NCR, Delhi, We have 3 plants for the group in near Bangalore area. So we see some consolidation taking place there. There will be synergies in the distribution cost. There will be synergies in the go-to-market cost as well. Number 7 is the product synergies, what we believe is going to take place after the merger of these companies. Number 8 is the brand synergies, what we see after the merger, because right now the 2 companies are spending separately on creation of brands. Once we have the combined budget, the impact could be much higher and superior. Now coming to my third segment, which is the benefits to the shareholders for both APL Apollo Tubes and Apollo Tricoat Tubes Limited. So coming to APL Apollo first, this whole transaction is EPS accretive, ROE accretive, margin accretive, innovative value-added product addition to APL Apollo's portfolio. The B2C centric approach which Apollo Tricoat has got so far, it will help boost overall brand equity for APL Apollo Tubes. And for Apollo Tricoat shareholders, the benefits could be number 1, faster expansion due to increased size of the company. The de-risking of earnings. Today, 75% of earnings come from single product category, which is designer tubes. Number 3 is the balance sheet strengthening with bigger scale, which will again lead to faster expansion. Number 4 is the ability to introduce new technologies into structural steel tubing. And number 5 is increased brand spends for creation of a bigger and larger brand Apollo into structural steel tubing. So with this, we would like to end our presentation, and we can open the floor for Q&A. Margaret, please go ahead.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kush Joshi from Kitara Capital. Please go ahead.
Yeah, thank you for the opportunity. And
I'm sorry to interrupt you, Mr. Joshi. Your voice is very low. Can you please speak a bit louder?
Hello, is it fine now?
It's better. Thank you.
Yeah. Thank you for the opportunity and congratulations for the team. Just a couple of questions. So can you just elaborate on the synergy and how long term the APL Apollo will benefit out of this merger?
Right. So, Kush, like we mentioned that the synergies, there are like three point synergies what we have figured out. Number 1 is the cost synergy. Number 2 is the product synergy. Number 3 is the brand synergies. So coming to the cost, again, there are 3 points where we are going to work over the next few quarters. 1 is the plant consolidation. Today, APL Apollo Group has 10 plants. 8 are with APL Apollo, 2 are with Apollo Tricoat. Within the NCR region, which is like 50 kilometers from New Delhi, we have 4 plants. 3 from APL Apollo Tubes, 1 from Tricoat. And again, near Bangalore city in South India, we have 3 plants, 2 in APL Apollo Tubes and 1 in Apollo Tricoat. So since we are also expanding our rural distribution reach very aggressively, we are looking to add new warehousing capacity so that we can service our rural distributors in a much efficient manner. So we'll see that if some of the plant and machinery could be installed at single location, and we can vacate that space for the warehousing capacity. This we have done in the past within APL Apollo Group 2 years ago because we used to have 4 plants in NCR and we consolidated those into 3 plants. And we are seeing that because of that warehousing capacity which had come up, we are able to service our north market in a much more efficient manner. So same formula we might apply again in the north region after Tricoat plant is merged and in the south region also. Then the distribution cost push. because right now both companies they have their separate teams who are servicing distributors. So if there is a single team going after the distributors and selling the products under single umbrella, there will be a lot of distribution cost savings. So what again we have foreseen. And third, which is very important push, is the go-to-market cost, because if you see the track record of APL, Apollo and Tricoat, these are all innovative products for what we have created the market, right? So it becomes very important for our marketing team to go and educate the fabricators who are the influencer in our value chain. Right now what's happening is the Tricoat team is having its own go-to-market cost and APL Apollo is having its own go-to-market cost, which we believe if combined, again, there can be a lot of efficiencies which can be brought. So this is on the cost side basis. As time goes by, we will be able to give you more clarity on the quantum of the cost saving, what we are anticipating once this whole exercise is done. Then second is product synergy push, where again we are very excited about the home decor product range, right? So Tricoat is already having products like designer tubes, stock cut for the home decor range. And in APL Apollo tubes, we are going to have color-coated tubes, where we are already setting up a mill in New Raipur plant. So combination of all the products within the home decor range, again, these are very high value-added products, and then we can have a specific marketing strategy to push these products into the channel, educate the fabricators about this product, and ultimately creating the pull from the market. And number three is the brand synergies push, where again, both the companies have been very aggressive in the last 2 years to push for the brand equity. Right now, both companies are having separate brand budgets, budget spends. But once this is merged into single entity, we are looking at a lot of efficiencies that, within a combined single budget, the return, what do we call ROI on the brand spends, that are going to improve significantly.
In that, with this taking into picture, the Tricoat product lines where we are trying to be a bit deferred expansion plan, so whether they will accelerate the expansion plan as the balance sheet becomes stronger post this merger. So what is the outlook there?
Yes, coach, very pretty much, because Margaret, I'm having like echo in the background. Can you please check?
Actually, it's coming from the line of Mr. muted his line, sir. Now you may go ahead.
Right. So, coach, yes, I mean, that is again one of the strong objective what we are trying to achieve here, because we think that Tricoat will be on a much faster expansion mode after the consolidation of balance sheet. Because right now, if you see the product portfolio of Tricoat, we have chalk cut and plan in the north region, and we have designer tubes and inline galvanizing line in the south region. So if chalk cut, which has been a flagship product for Tricoat, if we have to go pan-India, it would take us 5 years to set up a plant in west, in east, south. Of course, we could do brownfield expansion. But now with already established plant base for the group, it becomes very easy and fast to expand the capacity for the flagship products of chalk cut and plan. So yes, we do believe that the expansion for Tricoat is going to be much more fast now.
So much.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Dhruv Jain from Ambit Capital. Please go ahead.
Hello, am I audible?
So you are audible but not very clear. Can you please come on the handset mode? I think you are on speaker.
Yeah, can you hear me now?
Yes, this is better. Thank you. You may go ahead.
Yeah. Okay. So I had one question, and that was with respect to the valuation of the transaction, or rather the timing of the transaction. So just wanted to get a sense from the management that, why the transaction right now. I mean, Tricoat was a much smaller company in terms of market cap earlier. So, what is the thought process there, considering it was already a subsidiary?
Right. So, Dhruv, this question reminds me of a very popular American song by an American band, which is Never Too Late. But anyways, see, I mean, if you look at Apollo Tricoat 2 years ago, right, the Tricoat, of course, the valuation, the market cap was much lower, but it had zero profit 2 years ago. Today, this company, if you analyze the 9 months performance, 9 months of FY21, and given April, May were bad due to lockdown, this company was going to generate almost 100 crore net profit if you analyze 9 months number, which are already in the public, right? And this is despite the 60% utilization, right? So Tricoat in the 9 months had done volume of 160,000 ton on a capacity of 350,000 ton. So on a 60% utilization, the company is almost at 100 crore annual run rate. Okay, number one. Number two, 2 years ago, this company had zero ROE, zero earnings, zero ROE. Today on analyzed numbers, you can see the ROE is again 40%. And again, with the simple fact that the utilization levels are like, 60%. So what the consideration here is that even at today's valuation, whatever APL Apollo is giving to Tricoat, this transaction is EPS accretive for APL Apollo. It is ROE accretive for APL Apollo. It is margin accretive for APL Apollo. And today, the fourth reason I would like to highlight here is that both businesses are going to complement each other growth, right, in the longer term. The scale at which APL today, so scale was not a problem for APL Apollo, but the kind of improvement in the financial metrics what APL Apollo has given in terms of the EBITDA margin expansion, in terms of the volume growth, in terms of the ROCE expansion, in terms of the working capital enhancement, in terms of the debt reduction, in terms of the value-added product addition, and in terms of the brand equity enhancement, right? And if you look at the Tricoat, the way it has ramped up in last 7-8 quarters, what the management had time to deliver on the performance. So both the companies are going to complement each other, Dhruv. That's our main rationale to merge the companies today.
Okay. And my second question is more with respect to operations. So, I believe that earlier Tricoat was operating as an independent company. So now that, in about 8 to 9 months from now or a year from now, Tricoat will get merged into APL Apollo. So, will it continue to exist as a separate brand and how is it going to be operating under the APL Apollo umbrella, the employees, the top management, how is going to be the transition? So, your sense on that.
Right. So the Tricoat team is well equipped with B2C centric approach, right? Because that was new product category which came into Tricoat, which are more B2C centric products like chokers, planks, designer tubes, right? So we are going to be in need of this team very much in the future even when this entity is merged into APL Apollo. Like I said, APL Apollo itself is working on its new product categories into home decor segment. So color coated tube is one product which is going to come from the house of APL Apollo. So we do believe that the whole team can be fully absorbed, right? And anyways, Dhruv, if you look at Tricoat metrics, the employee cost, the marketing costs, and even for APL Apollo, right? So we have been working on very lean structure anyways, Dhruv, right? Our employee cost with the revenue size we have in the building material space, you will see that very, very minimal compared to any other building material company. So I don't think that absorption of the talent from Tricoat will be a challenge because we are going to have a new product segment which is going to be a big revenue contributor for the group, which is home decor category.
And the brand part? So, will Tricoat brand remain or then all the products will be termed as APL Apollo?
So that's the decision we are yet to make, Dhruv. We are evaluating. So we are talking to our marketing agency, creative agency, whom we have taken help to come out with above the line brand strengths for last 2 years. So I guess give us some time, we will be able to have much more clarity that whether it's going to be a single brand APL Apollo or we want to stick with Apollo Tricoat as well. Give us some time to come back on this.
Sure. Thanks.
Thank you. The next question is from the line of Urvil Bhatt from IIFL. Please go ahead.
Hi. Thanks for the opportunity. Just a follow-up question on the synergies part. How much time are you thinking will it take to realize these synergies? I mean, just broad timelines. You mentioned about plans to consolidate 4 plants into 3 or extend the warehousing facility in NCR. So just want to understand how much time are we looking at executing this, and also if you can highlight the quantum of savings that we are targeting. And second question is, I mean, if you can just give the specific timelines of various approvals that are needed. You mentioned December as the tentative timeline that you are targeting, but if you can provide the specifics about each approval, that would be helpful. Thanks.
Thanks, Urvil. So coming to the timeline for synergies, we are already on the drawing board, what needs to be done, right, once we have all the approvals in place. So how we are planning is that once we are through with the regulatory procedure, we should have all the plans ready with us, right, and the execution time would be 12 to 18 months, right. So whether it is at the plant consolidation level, warehousing capacity increase, or distribution cost is something which can be realized within 3 to 6 months as well. Go to market, again, it's a long drawn process which could take 12 to 18 months. Product synergies could be immediate because by the time we are anticipating this merger to be finished, we will have a color-coated tube line which will commence by end of FY22. So then again, that's a low-hanging fruit which we'll want to take up quickly. Brand synergies, again, it is going to be like low-hanging fruit because immediately we will want to merge the brand strengths together and have a combined big budget to go aggressive on the brand equity enhancement.
Understood. That's helpful. And if you can give the specific timelines of the various regulatory approvals, that will be helpful.
Right. So see the timeline again. The immediate process is to reach out to the regulators, which are SEBI here and both the exchanges, right? And then we move to NCLT. So and after NCLT, we will have shareholder meet and creditor meet, right? So I think this will take like around 6 months max, and then we will have like second motion petition filed with the various agencies, and then finally we would expect the final outcome. So although this is also like very simple plain vanilla merger, right? Which involves like only 3 companies. One company is anyways 100% owned by APL Apollo Tubes today, and then 56% is owned by the subsidiary of APL. And we do believe that both the shareholders are going to benefit from this. So I think it shouldn't take beyond December 2021. But yes, I mean, we are remaining cautious. So I guess later by FY22, we should be able to finish the process.
Great. Thanks, Anubhav, and all the best.
Thank you. The next question is from the line of Ankit Gaur from Systematic. Please go ahead.
Yeah, thank you, Anubhav. Anubhav, firstly, so it's not direct to this transaction, but indirectly we'll appreciate. Firstly, Anubhav, what's the outlook of Tricoat for next 2 to 3 years? Related to that, not sure that after merger you guys will provide a separate number of Tricoat or not. So how do we track the synergies and how do we track Tricoat's performance after the consolidation or after the merger? That's my first question.
So Ankit, Tricoat today, like I said, 9 months capacity utilization was 60% with a volume of 160,000 tons on a rated capacity of 350,000 tons. So what as a business plan we had projected was that in next 2 to 3 years we will be able to fully utilize that 100% utilization, right? So that's the business plan, and you can do the maths in terms of EBITDA per ton, what we're going to have with 60% utilization, EBITDA per ton, what it can move with 100% utilization levels, right? The company is almost like 0 working capital days. And whatever debt it had, priority debt it had on December balance sheet, again we were anticipating that it's going to become debt free very soon.
Yeah.
Right. So business plan would remain as it is. In fact, what we are anticipating is that it will get into a fast track mode, because some of the products where we were thinking that how we will scale this up. Right? Chocolate has been such a successful product for Tricoat. Within like 3-4 quarters of launch, we were selling 250,000 chocolate tubes per month. Our product was going into 40,000-50,000 homes every month. But it was like, again, sad to know that it was only in the north market, right? So now if we have to expand into western market, eastern market, south market, we can use APL Apollo infrastructure to install those chocolate tube mills, right? So it will only fast track it. And as far as the tracking of Tricoat is concerned, I think segmentation, we will have to consult with our auditors and consultants how it's going to be done. But I think for the benefit of everyone, we can disclose the Tricoat numbers separately. I mean, we don't mind that. Of course, we'll have to check with our auditors and consultants. But if at all, Tricoat numbers will come into home decor category. That's what we are planning right now, right? So. And synergies benefit. See, today, you know, the EBITDA per ton, anyways, we are doing line-by-line consolidation when we are reporting console APL Apollo numbers, right?
Yeah.
So today, the EBITDA per ton for 9 months was 3,950 rupees, right? Assuming we close FY21 at some number, FY22 at some number. If there is improvement you are seeing year on year, that means the synergies are coming into play. So I don't think there's going to be much of a problem for the analyst on the street to check if synergies are working out or not.
Sure. My next question was very much related to that. Better product mix of APL Tricoat was getting reflected in EBITDA per ton since it was line by line. So we will see major, the acceleration or probably major accretion will happen on a PAT side after PBT. So minority interest will get knock off there.
That's right.
Right. So on a margin side, if we really see, we are already getting a better product mix in our existing numbers. There'll be some cost savings which will reflect in EBITDA per ton as well, right? After this merger.
Yes.
Okay, Anubhav. Thank you very much for this.
Thank you. A reminder to all the participants, if you wish to ask a question, please press star and 1. The next question from the line of Kashyap Javeri from MK Investment Managers. Please go ahead.
Yeah. Hi, Anubhav. Thanks for the opportunity. A couple of questions. One, like you highlighted, this merger is going to be, EPS accretive, margin accretive for APL Apollo from day one. Just wanted to understand, in first 9 months of this year already, Tricoat is contributing almost about 24% of the consolidated EBITDA, and which still, if I look at even quarter 3 on annualized basis, there is still spare capacity available there. So in terms of this, 10.8% dilution versus 24% already contribution, if I look at PAT level also, it's higher than about 11-12% contribution. What was the deliberation on the spare capacities on both the sides, which resulted into this ratio where APL Apollo looks to be benefiting a lot, whereas, Apollo Tricoat, actually seems to be probably a bit of a loser in that sense.
No, so Kashyap, if you look at, the number which you are saying that it is contributing 24% to my PAT anyway, so 56% is already owned by APL, right? So that you have to cancel that.
No, I'm looking at even EBITDA level for that matter. Its whole thing is consolidated, right? So my EBITDA as of today as APL Apollo shareholder includes 100% of, which I will retain and for which I'm doing about 10.8% dilution.
But 10.8% dilution is for the 44% stake which I'm going to buy from the market, right? So
of course. Let's say if I look at even half of that, today I am already getting 12% contribution from Apollo Tricoat, whereas I still have about almost 30-40% spare capacity which I will be utilizing later on, for which probably in fact I'm not paying at all. So as an APL Apollo shareholder, I'm happy.
Kashyap. Yeah. That is with APL Apollo also, no? APL Apollo is also.
That's what I'm asking. So in terms of spare capacity, how was that handled? That's the question actually.
No,
Go on both the sides.
No, Kashyap, so both the products in
Yeah.
both the products in both the companies are different, right? Tricoat.
Right.
So there is no overlap between APL Apollo products and Tricoat products today.
Right.
Right. So APL Apollo has its own product portfolio, which is being utilized at 60% capacity today. Tricoat has its own product portfolio, again, that is being utilized at 60% capacity today.
Right.
So both will ramp up. APL Apollo will ramp up on its own. Tricoat will ramp up on its own. Once they are merged, the synergies will only come into play. And then what we are trying to do here is to make a greater home decor product segment for the group, right? Which will be combination of Tricoat products which are already established, which are already having a very strong demand scenario. Over and above, we are going to have a color-coated tube from APL Apollo, right? So this makes a very strong home decor product portfolio for the group. That's what we are quite excited about. And within that, the go-to-market strategy, the distribution strategy, the brand equity enhancement strategy, that's where you're going to have a lot of synergies.
And as of today, when you look at go-to-market expenses for both the companies, as a percentage of revenues, would they be virtually same, or would it be, slightly higher in case of one which is like more of home decor versus the other one which also includes, some bit of structure?
Tricoat is higher today.
Okay. And would you be able to, for 9 months, if you can give some percentage number, if that's possible?
Yeah, so Tricoat, the overall brand spends are 500 rupees per ton.
500 rupees a ton.
Yes.
Okay. And last question is on clarification. In the beginning, you made a remark about, this swap ratio where you mentioned about, average of the stock price for, certain months. If you could repeat, that particular, I sort of missed out on that.
So that is 3 months weighted average daily price.
For both the companies.
For Tricoat, if you look at the formula, 3 months weighted average for Tricoat share price,
right,
and the APL share price, which it was at the time of board meeting, it was 25%.
Okay, yeah. Sure, that's it from my side.
Thank you. The next question is from the line of Rahul Agarwal from ICICI Prudential Life Insurance. Please go ahead.
Yeah, thanks a lot. Hi, Anubhav. I'm just taking a bit ahead from the last question. So the Tricoat, do you think that there was a scalability issue for APL Tricoat, and with this merger, that scalability issue is gone?
So Rahul, there was no issue as such, right? Tricoat started from 250,000 ton capacity. We took over the plant in 2019, and first quarter of FY20, we started the production and sales. So within 7 quarters till December 2020, it had 2 quarters disrupted due to lockdown, and in third quarter we could do 70,000 ton of run rate volume, right? So and in meanwhile during the lockdown we increased the capacity from 250,000 ton to 350,000 ton. Right. So there was no issue as such, Rahul, right? The point we are trying to make here is these scalability will fast track now. It will be quick now, right? Because if you have to go and set up a greenfield plant, it's going to take 2 to 3 years versus if you do brownfield expansion, it's like 6 to 9 months. So it was not an issue. It was never an issue. It is just that with this synergy coming into place, it is going to be very, very fast track more.
Okay. And if you, in the terms of distribution reach, in Tricoat and APL Apollo, what is the difference right now, and how much of common dealers would be there?
Right. So Rahul, today APL Apollo Group has almost 800 distributors, right? And Tricoat today has in total 100 distributors, which I would imagine 60-70% would be common and 30-40% will be exclusive for Tricoat.
Okay. And in terms of geography, is there any particular geography that Tricoat is facing an issue where the Tricoat is not penetrated and which can now fast track?
Rahul, I mean, because of the sheer geographical presence of the plants of Tricoat today, which is north-centric and south-centric, these are the markets where we are strong, and west and east market where we couldn't penetrate much because of simple fact that all the capacity was being absorbed in the markets closer to the plants.
Okay. In terms of pricing power, does anything change after this in Tricoat?
No, Rahul. Again, because of the simple two facts. Number one is the pricing power is because of the innovative nature of the products, right? So as long as that is there, it won't impact whether it is being sold under Apollo Tricoat brand or APL Apollo brand, number one. Number two, what we are excited about is that once the combined ad spend budgets come into play, right, the kind of impact it's going to make on the consumer mind and our channel partners' mind, that again will play an important role in lifting the overall or maybe maintaining the pricing premium which today is existing.
And just a little more in terms of general update. So, how has been the Jan Feb? How has been the momentum?
No, Rahul, please let us stick to the questions from the deal itself, right? For general updates, please. I mean, it's only 30 days left for quarter to end. We should talk about once the quarter is over.
Sure. Okay. Thanks, Varun.
Thank you. The next question is from the line of Abhishek Ghosh from DSP. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just one thing, earlier Mr. Rahul Gupta's, domain and functionality was more towards Apollo Tricoat, and now that the with the proposed merger, how does his things that he looks at, does it change because now it's a merged entity? There will be a lot of commonality. So if you can just help us understand that.
So Abhishek, I mean, so today, if you look at the timeline from today, right, it's at least 9 to 12 months, since this whole procedure is going to take place. So anyways, for 12 months, we have a clear, responsibility of running this company. Number one. Number two, even after the merger, right, like I said, there was a clear business plan for Apollo Tricoat that we had to utilize 350,000 ton of capacity for Tricoat in the next 2 to 3 years. So that would remain as it is, right? We are not going to jeopardize our plan to to meet the targets what we had set for Apollo Tricoat. So I guess for next 2-3 years, the clear objective for Rahul would be to utilize 50,000 ton of capacity. Over and above, we are being very aggressive on the home solution side, right? Wherein we want to get into the solution offerings, right? Within the territory of the products like the designer tubes, right, which are going to be home roofing solutions in the coastal markets. Number two is chocolate, wherein we want to go into ready chocolate solutions and door solutions, right? So that's a new vertical what we are going to work for the group. And with this merger,
आपण ज्या व्यक्तीसोबत बोलत आहात त्या व्यक्तीने आपला कॉल होल्डवर ठेवला.
Sorry about that, sir. You may go ahead now.
Yeah, sorry. So that new segment of home solution is going to get a major boost after the merger, because then we can use the infrastructure which is there pan India. We can use the distribution network pan India. We can use the go-to market route, which again is available pan India.
Okay. Thank you so much for answering my questions, and all the best.
Thank you. The next question is from the line of Pawas Pechia from Enam Asset Management. Please go ahead.
Thanks for the opportunity. I believe you must have done some kind of study before the merger about the synergy benefits. So any initial or rough estimates on synergies?
I guess, of course, like I said, we are already doing that. We have done that. We believe that it could, on the face of it, what as management we can tell you is, it is going to add at least 5% to the EBITDA per ton today. That's the minimum what we are looking at.
I think in previous calls we said that the 3,000 rupees per ton EBITDA has already moved to a kind of 4,000 rupees per ton level. So this adds another 5% to that steady state.
Yeah, so that's like 150 rupees per ton.
Okay. And secondly, you also mentioned that it's a tax neutral kind of merger. So, but I believe there were some losses which you were carrying in Tricoat. So has that been kind of adjusted, or that's not meaningful?
Yeah. So whatever losses Tricoat had, that has already been nullified against the profits what this company has delivered over the last 7 quarters.
Okay. Thanks. That's all from my side.
Thank you. The next question from the line of Madhav Marda from Fidelity Investments. Please go ahead.
Yeah, hi, good morning. Thank you so much for your time. I just had a question on the home decor solution, which is being emphasized on the call. I'm assuming like maybe next 5-7 years, if I sort of think, will home decor become like a big focus area for the company, sort of to push the B2C portfolio, and then we'll have more new launches coming within home decor apart from the color coated tube and designer tube, etc.
So Madhav, see, this is a natural path for the group today because we have been constantly highlighting that 50% of our products are anyways going inside the residential homes or complexes, right? Apart from commercial and infrastructure what we have. Okay. So when we have 50% of our products going into residences, it makes very much sense for us to keep on premiumizing, to keep on selling more and more value-added products, right, for that category. And today, if you look at Tricoat, which today is like 20-25% of the volume today for the overall group, so that proportion is anyways going to be much bigger over the next 4 to 5 years. And the simple basis of this thesis is that 50-60% of our products are going inside residential houses.
Understood. And then there will be more new launches that we are sort of working on, more new SKUs that will come within home decor. That's the idea.
Yeah, definitely. Right. So we already have too much on the plate today. Apart from ramping up of Tricoat products over the next 2-3 years. Then there's color coated tube category, which we are going to start from late quarter of FY22. So once that portfolio gets stabilized, there will be more SKUs, definitely yes. And second, that around this segment, we are going to work on the solutions as well, right? Offering the end-to-end solution. So yes, we are quite excited about this whole portfolio, Madhav.
And just last question on this, in this home decor products for structural steel tubes, I'm assuming competition would be quite limited here, that we would say, versus our, some of the other portfolios that we have.
Right. So home decor, if you see today, which is consistent of designer tubes, chalk cut tube, blank tube, and color coated tube. So yes, these are almost monopolistic products for the group.
Got it. Okay, thank you so much.
Thank you. The next question is from the line of Bharat Shah from ASK Investment Managers. Please go ahead.
Yeah, hi Anubhav. For the 9-month, Tricoat accounted for how much of the profits of APL Apollo?
So today, Bharat Bhai, if assuming APL Apollo without Tricoat today, Tricoat is contributing around 22-23% of the profits, and 56% is already with us. So the minority which goes away is around 13%.
Okay. So basically, the APL profits are 100, then add 23 rupees more, the 123 becomes to consolidated profit.
Yes. So 123 is 100% of Tricoat, and then the minority which goes away is 10 rupees.
Okay, 123 is for the 100% of Tricoat.
Yeah, yeah.
So against 13% minority moving away, 10.8% dilution essentially, right?
That is right.
Oh, thanks.
Thank you. The next question is from the line of Amber Singhania from Asian Market Securities. Please go ahead.
Hi, Anubhav. Thanks for taking my question. Just a couple of things. Can you hear me?
Yeah, please go ahead.
Yeah. So first thing is when you said that post this merger, it will be easier and much faster in terms of expansion and capex. So just wanted to know, will we wait to utilize the current unutilized capacities first before going on any further expansion on this home decor side, or we will be expanding simultaneously in the other region wherever we have gaps on in terms of presence of Tricoat products as of now?
So, Amber, what we are planning to do here is that the products where the capacity is already at constraint level, like like for chalk cut tubes, that is one low-hanging product line where we should definitely be able to scale it up. But then yes, I mean, like I said, Tricoat has a 350,000 ton of existing capacity, which is yet to be utilized over the next 2 to 3 years. So that remains as it is. And number 3, Amber, is the point that this color-coated tube, which will start from the house of APL Apollo, once that segment gets created, right, with like lot of SKUs. See, it's all about offering the SKUs to the distributor, right? So once you have at one end you have chalk cut tubes, another end you have designer tubes, then you have color-coated tubes, then you have products like plank, which are innovative, again, sealing and boundary wall solutions. So with the broad-based SKU range, that whole exercise becomes very easy and it gets on the fast-track mode automatically. Right. So I guess, like I said, 1 year, over the next 12 months, we are very clear that the both companies will try to achieve the targets what we had set up during FY21. That's for next 12 months. Then once this merger process is complete, we will be ready with our synergy plan, right? Because that's again which is very critical for us as management. So we will start implementing the synergy plan, and at the same time we would have identified the products where we want to fast track the expansion, right? So that's how we are looking next 12 to 18 months for ourselves.
Okay. Secondly, in terms of reporting segments post the merger, so currently the Tricoat segment which we mentioned separately, would there be any reorganization on that part wherein the other home decor products on other segments will come in and sit on this particular segment on APL Apollo Tricoat which we currently report, and how will we able to match it like to like basis? Will you give us a pro forma on that?
So like I said, we are still discussing with our auditors and our consultants. Right now the regulations are so strict for the auditors that they don't want to comment anything since they at least have they would have heard from the exchanges and NCLT, etc., before they start communicating how the reporting would go on. But like I said, that we may want to convert Tricoat into a home decor category, which will be addition of APL Apollo products, right? But yes, I mean, for the benefit of analysts on the street, we would be okay to give Tricoat numbers for a while if anyone has any clarity to get. I mean, we are okay with that.
And lastly, on home decor side, if you can just give some color about how big is the market today, what rate it is expected to grow, and where we believe that home decor will be the major value driver going forward. So if you can give some color about the overall market pie and how it is growing and what is our share in the overall business as of now, as far as home decor is concerned.
Amber, if you look at the home decor segment, right? See, the philosophy here is that what our products are replacing with, right? So they are replacing old conventional construction products like steel angle panels, wooden structures, aluminum profiles, which are expensive, which are not fire resistant, right? Which are not termite proof, right? These are the benefits which our products are offering to the end customer. So that's how these products are being accepted. Number one. Number two is the fact that all these products were innovated and launched by APL Apollo Group, right? So there was no existing market which was already there, right? So we launched the product and we created the new market for these products, right? We created the need for these products. People were happy using wooden door frames, right? But we offered steel door frames and which are closed-ended tubes, which are again superior than the open section steel door frames which are available in the market, right? Easy to install, cheaper, 2 hours installation, right? Termite proof, fire resistant. 10 years after 10 years of installation, you can still sell your steel door frame at a cost much higher than what you paid for because of the steel price inflation, right? Now talk about designer tubes, right? So embossing and putting designs on the tubes. Again, no one is doing that in India except Apollo, right? Color-coated tubes. You can check in the market, no one is doing that. Now, this is on the line of when we launched pre-galvanized tubes, GP, our Apollo Z category, right? Earlier, the whole market was black tubes, right? Then we shifted that market to zinc-coated tubes, which became our Z category. Today, that's contributing 25% of my top line today and more than 30% to my bottom line. So now we will premiumize that zinc coated into further color coated tubes. So that's a constant market creation activity what we keep on doing, Amber. And with both the companies coming on the single platform, I think that platform will become even stronger.
Mm-hmm. I understand the opportunity is pretty big. Just wanted to get some color in terms of quantum, if we can put it any kind of size which it can be on that level, but that's fine. I understand it's a developing segment on that. Thanks Anubhav, and all the best for the future. Yeah.
Thanks. Can we have last question please now?
Thank you. The next question from the line of Nitin Bhasin from Ambit Capital. Please go ahead.
Hi Anubhav. Small question. You mentioned in the beginning that you want to take Tricoat's reach to every part of the country, to the multiple plants that APL has. Can you give a sense on how easy or difficult and the resources required to manufacture or finish Tricoat's products in the APL other locations? What are the challenges for that? How is it possible or not? If you could give some sense on that. That's it. Thank you.
So Nitin, I think this question came earlier also. So if you look at Tricoat business model today, right, we have 2 plants, one located in North India, which is like 40 kilometers from New Delhi, where we are doing 2 products, Chaukhut and Plank. And then we have a second plant in Bangalore, which is a much bigger plant. It has again 2 products. One is designer tubes, which has 2 brands, Signature and Elegant, and number 2, inline galvanizing tube, right? So that plant is still under stabilization mode. Now the product which is coming from North plant, right, Chaukhut and Plank. So these products have created their market within the North region, right? So Chaukhut, before the capacity expansion to 350,000 tons. The Chaukhut capacity was 50,000 tons, and within 3-4 quarters of launch, we hit 50,000 ton sales volume run rate. Nitin, when I say that we are selling 250,000 Chaukhut tubes every month, which are going inside 50,000 homes every month, that is only in the North market, right? Similarly, Plank, if you see, it's a very innovative rectangular tube which is being used for multiple applications inside any house. Again, it found its market near to the plant, right, which is mainly NCR and UP, Uttarakhand belt, right? So it hasn't even moved to Rajasthan yet. Okay. Similarly, the designer tubes which are being created or which are being manufactured in South India, they found their market within the South India itself, right? So hardly any designer tube is coming to North India from our South plant. So when I say that it will all get into fast track mode, I meant that if Tricoat had to go and set up a plant in West today, right? It's a minimum 2 to 2.5 year procedure, right? So we are already doing a new Raipur plant in APL Apollo. It's been 3 years since we conceptualized the idea, we start acquiring land, right? So it's a 2 to 3 year process minimum. Now, versus if I have to install a socket tube in a plant of APL Apollo, which is 50 kilometers from Mumbai in our Murbad facility, we need to order socket tube, right? It's going to be a brownfield expansion. The time reduces to 9 months to 12 months, right? So if we have all the infrastructure ready, we have space for brownfield expansion, the time reduces from 3 years to 1 year. So that's what we mean, that the expansion of Tricoat could be on fast track mode. And then again, this may not be relevant for all the 4 products, right? So the immediate low-hanging product line, what we are able to get is the choker and the designer tube.
Okay. Thank you.
Thank you. Members of the management, can we take one more last question, sir?
Okay, go ahead.
Thank you. The next question is from the line of Sanket Goradia from VDC Investment. Please go ahead.
Yeah. Hi, Anubhav. Just wanted to kind of get your sense on, we've been talking of, the brownfield expansion helping us, sort of do things faster. So any indication on, volume growth? And two would be, my second question would be that now that we're at 33%, any indication of plans you want to highlight on, maybe what's the thinking of the promoters and with this new shareholding? Thank you.
So Sanket, coming to the point number 2 here, yes, of course, the family's holding has come off to 33.5% from 37%. But I think what the decision as a promoter group and the management working with them, the whole idea was to create a structural steel tube giant under a single company, right? And with a very, very simplified group structure, right? So yes, equity dilution is a small disappointment. But then the philosophy this promoter group has worked on, Sanket, is small equity, beautiful equity, right? And this is the philosophy which we are always going to maintain, right? We look at the American companies like Facebook, Amazon, Netflix, Google, Tesla. All the promoters don't own more than 10, 15, 20%, right? But those companies, the shareholder value creation that those companies have demonstrated. So we are always inspired by that, Sanket. And the philosophy will continue to be like that for us in the future.
Sure, that's helpful to know. Thank you, Anubhav. And just if you could just throw some color on the volume, do we understand that we'll have a faster volume growth than what we had earlier estimated because of this amalgamation?
It should happen. But too early to comment on any numbers. But yes, our history, Sanket, right? 27% volume CAGR for last 5 years, 20% volume CAGR. We have seen more years of GST implementation, demonetization, NBFC crisis, GDP growth falling below 5%, and also the lockdown period, right? So I guess this will only fast track it would definitely give some boost to the growth, what we are already going to demonstrate. But yes, difficult to give a number today, but yes, it should be higher.
Sure. Thank you so much, Anubhav.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the conference over to Mr. Anubhav Gupta for closing comments.
Thanks, Margaret. Thank you to all the participants. I would like to extend our gratitude on behalf of the management, as you could all join on this call on such a short notice. And we look forward to speak to you again during our Q4 FY21 earnings call.